The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. Basil Chapman following. Steve Rhodes. Great 2 hours. Thank you, Steve. Excellent program as always. Very articulate, great life lessons as well as technical analysis. I love it. So, what did you say? Thursday, Larry Pesavento comes on straight after me, Commodities Hour, Futures Hour, and that should be great because a lot is happening. And we're going to go through it all. Don't worry. Here we go. We've got the Dow up 135. Of course, this is the Bernanke rocket ship, Bernanke banality. There was nothing to say, and he said it. They're just feeding this market. Hey, don't complain. That's the way it has to be. Even more important than that is that the market has responded in a very intriguing way because you actually have bonds up a little bit. I'll talk about that as well. But you've got the market up. Gold is up very strongly. Gold is up $39. Gold is up $30. I mean, what do you want here, huh? Okay, let's go. The Dow is up 135 at 15,529. The S&P is up 16 at 1668. You've got the comp index up 40 at 3561. You've got gold up 30 at 1278. Now, yesterday I spent a lot of time. Let me just move to this chart here. If you're looking at Tiger TV, I got it right there. If you're looking at Tiger TV, this is what you're going to be able to see right at this particular. Come on. Don't be silly. Go right to it. And there. I just want to get everything organized so that I can see what my wonderful engineer Al is going to give me here. Okay, and now I'm going to move that chart so I can see the charts so that it's the same way that you're looking at them. What I'm going to show you here are a couple of things. The chart you're looking at right now is the NASDAQ futures up in leg B. I spent a lot of time yesterday discussing how the IWM, that's the Russell 2000, and the NASDAQ, the QQQs, were in leg B. There's no other way. There wasn't even an alternate wave count as there might be in the E-mini futures, the S&P. If this is leg B, you've got to anticipate, if you're a Chapman wave aficionado, you know that if everything is intact, we should go to C and D. We should get to a peak B by having a lower high bar. That is, let's just say the high is 3,040. If tomorrow the high is 3,039, it's a futures, 0.50. 3,339, that's a peak. If it's exactly the same, 3040, it just keeps that leg in place, leg B. If it goes one penny in this case, it'll have to go the futures. These contracts trade in 25 cents. So if it goes a little higher than that, it extends leg B. Simple technique. Simple. I'll go through it a little later on if I get a chance. Most importantly, there's the pattern that I've been talking about. To learn this pattern and to understand. I had an email from someone this morning, very astute market participant, and wanted to know how, with so many people negative, how come people have just missed the most amazing, quick 1,000 points to the upside? I had another email from someone saying, how do you trade this when it goes up and down and up and down? This is the mildest, most benign market I have seen in I don't know how long. Do you remember 2008 and 2009? You got 500, 600, 700 points in a day up and down. You could actually have that added up by going 200, 300 points up and down all day. There's nothing here. That's why the volatility index is at 14.11. The VIX index, I've made this clear for I don't know how long. As long as that volatility index remains low, make it a simple. I keep thinking of this one colleague, I had a musical colleague who became a CPA, I think it was, and then he handles people's accounts by doing in funds, but only environmentally friendly funds. In other words, a real PC portfolio. And this is like a year and a half or more. We were in contact, and he said, "Wow, what do you do with this market?" I said, make it as easy as possible. If the volatility is under 20, you're going to be okay. When it starts to close for a week or two above 20, watch out. That's as simple. You want to make techniques. So let me just go through this. If you are looking at this particular chart, that pattern, now I'm going to do this again. I've been doing it for 2 weeks now, I believe. That pattern that I call the falling axe, I give it a nickname. Of course, when you give things nicknames, they never ever become traditional, because no academic would like to do a study on the falling axe. So I'll call it the declining cone, or the declining expanding wedge. Maybe that's better. Or two trend lines that are expanding, one going low and the other one going much lower. You might want to make it hard, but it looks like an axe. It looks like there's the handle, there's the blade of the axe that's expanding. That's what it looks like. When that breaks out, look at this. When it breaks out, you can get a 1-to-1 to the upside, and that's what I've been talking about. Now, what I've been saying is, and now I'm going to show, let me finish the numbers. Gold's up 31. I was going to go to the gold chart. Yeah, I'm going to I'll keep on theme. Here we go. So the gold chart that I want you to look at, the GLD, just to make it easy. What I'd said is that pattern that looks like it's had so many of these H patterns that turn into an M and then break down. This is the shortest one. This should be the most bullish. And what I'd said is yesterday, if by later today or tomorrow it doesn't break decisively over 121.95, the large arch high, or 122 was the high for the day, I said this pattern is going to fail. But if it's able to do that, fine, you're going to get the MACD and the stochastic in line to be able to see price movement in concert with those two technical tools. And now I think you've got it. Doesn't mean that you're out of the woods. With gold, you really can't say you're out of the woods. But what I would say is that the gap formed today, if I can go to the GCQ chart, wow, there isn't even a gap. High yesterday was 1242.20, and the low today, oh yes, 1262. Okay, there is a gap. No, it doesn't look like it. Let me expand this. How can it not be a gap? Oh, because it started trading yesterday afternoon. I got it. Okay. Oh, is that? Yep, that's the 10th. So the 10th, the high was 1265.60. Of course, I was looking at the low instead of the high. And today's low is 1262. Okay, it filled the gap a little bit. And that, if there wasn't a gap. If there was a gap, I would have said that that gap won't get filled for a while. Does it have the same impetus as when I said, when we made that volume spike low, that there was a chance that we would go 38, maybe even 48 sessions without coming back to retest it, and it took 46 sessions to test it? I don't yet know. All I can say is that I think that the downside is pretty much done for gold and most, not all, but most of the gold stocks and silver stocks, and that this should be a rally that has upside potential. Whether it has a V-shaped recovery, I don't know yet, and I'm going to explain why. This is the dollar. Now, the dollar is potentially making a Chapman wave Roman candle right here, but I had to wait for peak D. Well, it made peak D, 84.75 on the index on the 9th, 84.73 yesterday, gave you peak D, and today gaps down, and it's the same kind of candle. And if you get two of these candles in a row, you've got to be careful, because if the next day or within 2 days the price goes into the middle of the wick, 82.72 in this case, there's a real good chance it's going to test and then break the low of 82.42. But I've been talking about this MACD. The MACD is still very good. The stochastic's still only at 84%. I think there's residual strength in the dollar. But I believe that we've made at least a short-term top in the dollar, and that the Euro-EUR-USD, euro currency pair, this is really Larry's kind of work over here. He trades these things. I'm just a theoretician here. The euro, you can see, is doing the same sort of thing, and a wonderful spike from the 1274 area, 1275.46 area. And in this particular instance, it's gone all the way up this morning to 1.32, and now it's down to under the 200-period exponential moving average. But I believe that the work for the upside is being done here. I'm going to talk about some other things in a moment, but first of all, I want to say bonds. The TLT being up is good, but it's really only just retesting the left side, right side price time match that I've got here in the weekly chart. And that says yesterday was, last week was the week that should have a chance to retest 109, Whoops, I've got it down at 106. It's the 106.08 area, and we went down to 106.17. I missed it by 9 cents. This is the second week. This is the first week that's beyond that left side, right side price time match. There's that inside wedge, that dashed line. This is the TLT weekly. And what it's saying is that the stochastic is at 7.6%. It is the equivalent of being at 92 or 93% on the upside. If it holds at these lows, then all we're looking at right now is a chance that there could be rallies, but their counter-trend rallies as 109 to 111.5 becomes extremely strong resistance in the TLT. I'm going to put forth a theory right now, and I'm going to say, based on my monthly work, and I hope for subscribers of my opening call, I did this before. That's one of the reasons why we've been staying long all the last week and a half since that reversal that Monday a week ago. We've been looking only at the long side because we've got the core stocks that I'd like to own that I think have a potential to do very well, even if there's a pullback later on. But it's not peak C that you have to worry about in the monthly charts. It's what happens in leg D to peak D that is really important, and that could be the first time that we get more than a 5% correction. I'm throwing that out. I'm just throwing it out. And it's out. Just gone into space. So here are a couple of things that I want to talk about. I want to talk about just real quickly, if high-grade copper, I'll just use the U contract for now, it has gone to leg D. It's still a pathetic move after the beating that it's taken, but it's a start. And what it's saying is, I'm desperately trying to make the base of $2.98 back on the 25th of June, a propellant, not a magnet, but a propellant, so that that whole area right there becomes a liftoff to be able to get into the 330s at some point over the next 2 weeks. That's going to be really important. If it fails to do that, Bernanke is doing something that is not being confirmed by international use of copper, which is really important. Okay, we're going to our first call. We've got Ernie in Dearborn, Michigan. Hi, Ernie. How are you?
I'm fine, thank you. Very interesting subject which we're about to embark on. If you remember, you mentioned that RNA Provenza, that you, oh my God, you should have got into it.
Yeah.
Did you happen to see it today?
You know, I've got it right there. It's. I like to keep these things out there on a special a screen. It's like the finger wagging and say, where.
But anyways, let me form my question. The stock that I've called you about in the past, of course, is their big competitor, Sarepta.
Yes.
And it's very interesting.
Wait. I don't want us to run out of time. I'd love to hear what you got to say, so I want to give you some time. Meantime, great. I'm going to put them both up here so that we've got them and we can talk about them. Folks, we're looking at RNA, which is at $29.85. I spoke about it yesterday. We wanted to buy it at $22.60s. It's $29.85. I'll be back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pizzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back. Dow's up 138. S&P's up 17. And I'm going to go a little bit more into the market scenario a little later on. Right now, I'm commiserating here. We've got Ernie from Dearborn, Michigan online. We were talking about RNA, which is, let me just put that chart up here, RN. I'll never remember this name, something Prosenza. That's it, Prosenza. Oh, I hate these names that have very hard to remember. Prosenza Holdings, it's their specialty is, well, look, I wrote it way down here at 20, and now it's trading at 30.65. Prosenza Holdings NV, I guess it's a Dutch company, genetic disorders, a biotech. Okay, Sarepta, I'm going to put up here SRPT.
Right. Just a quick 1, 2, 3 on it. See, these two companies have been dueling over the cure for DMD.
This is the other one. Oh, okay, yes, okay.
And then Glaxo bought out Provenza, and now they spun off a goodly portion into the marketplace, okay?
Oh.
And, of course, I'm trying to see which one's going to be the winner. And the amazing part is Provenza has gone up from 17 to like 30 in the last 3 days. And, of course, my stock has hung in there tight comparatively during all this going on. So I don't know if it's telling me anything.
Yeah, it is. What it's saying is at 55.20 was the high in Sarepta Therapeutics. That was back in the week of that was in February of 2006. Let me just type that in here. 55.20. And I'm going to show you something really interesting. I actually did this on the chart some time ago. And I lost it because I've been losing charts, not losing, but they just in another folder. I'm just unable to find them. I'm hoping that's going to be resolved. Having met with one of the engineers, or at least one of the people at TradeStation. So here we go. Look, I'm going to do a left side. Right, so I got to find the most important candle. That's that one right there. Now I'm going to do this, and we're going to do a left side, right side. There we go. Change the color, make it light green, because that's bullish. This one's going to be red, because it was bearish. And this says that by August of 2013, the body of the candle high of that all-time high of 55.20, so the body high is opening price 52.08. So 52.08 to 55.20 will be the area, and the price that I'm looking at would be, let me just draw this because this is the way I like to do the technique. Take it from there all the way to the top. Okay. It says, actually I could have two. I'd like to do two, and that'll be even better. I'm going to do another one here. Okay. It says at this particular time, both companies are in an area that investors consider to be a lucrative area. That's all. I mean, in biotech, you look lucrative or non-lucrative, or you look time. The only two things that count is the immediacy of money coming in, or it is the funding of a project that has tremendous potential, or else there is no deal. As I understand it, I know a lot of people in the business, that's basically it. There are times when they are prepared to go to the wire and say, we believe that at least one out of the three FDA products that we got for FDA approval, whatever it is, will be passed to maybe the third level, and that's the most important level. So in this particular instance, I think this is just purely business. I don't know if it's the product, because I don't really know what the sales are at this particular point. And it is a fairly limited, of course, genetic, when you talk about genetic disorders, that's vast. But in fact, for the actual medication as a prescribed medication, I don't know the numbers. But all I can say is from the chart pattern, I spoke about this, I think it was before you had called, I'd been looking at it, and what I'd said is that incredible inverted Roman candle failure pattern from October of 2012 in Sarepta Therapeutics, where it spiraled from the 1484 level to a round number high of 45, and then came back and closed at 21. Right. That if it got at any point halfway into the candle, I don't know why I missed it for my subscribers, because I discussed it in great detail. If it got halfway into about the 34.75 area, it should start wending its way towards the previous peak, and that should take it in an inside buy mode to peak ABC. Well, it turns out that it is more than that. It's been two ABCD, and now you're in another ABC. I guess that could be an E. So it's making its way, excuse me, it's wending its way towards the 45 area. That's going to be, I wouldn't say it's going to be key resistance, but going to, at, or just above is where you can expect the strongest repellent, because it's a magnet, and then it sort of stops it dead.
I hear the music. One quick question. When you come back, is there any chance, because I see a point figure run to 64. When you come back, maybe a comment on that. I'm going to hang up.
Okay. I got another trend line. We'll talk about that. Yep, we'll be back with Ernie straight after this break.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. We are back, and the Dow is at 139, up 139, 50,430, and up 17. Now, folks are going to make, on the news, going to make a big deal about the market and talk about it making highs. But I don't know why they do that. You've got to go for the all-time high. You can't enter the closing price. I couldn't care about closing. Who cares about a closing price? I want you to know that the Dow went to 15,542 on the 22nd of May, and that by the 17th, there's a left side, right side price time match going to 15,542. If it goes to 15,543, that's a new all-time high, and it's broken the previous all-time high. I don't want to get intraday. What is this? So we're on with Ernie in Dearborn, Michigan, and we were talking about RNA. We were talking about SRPT, and SRPT is Sarepta Therapeutics Inc. It's a stock that actually was trading a lot lower, and then it had a 900 for one split. I don't know what it was, but it was an amazing split, and it's now trading at $43.35. It once hit 163.50 in a peak D Chapman wave sell signal at 156 round number close, and then it plunged down. This is the Eiffel Tower formation, straight up, straight down. And then it took a long period of basing, and now what it's doing is it's trying to head towards the high of February of 2006 of 55.20. That would be the target. But on the way, there are a couple of stopping points. So, Ernie, yes, the answer is I see it going higher. I see it going higher, but it needs the MACD to get into the 80s to be able to sustain a move into the 46, 47 area, and right now that's at 77.83. I don't think it'll take more than a point and a half. The other thing is that the moment it breaks over that 45 round number high of October of last year, make absolutely sure that you know that that level of 45 is going to be a magnet, so that even if it goes to 46 and a half, it's going to come back to about the 49, 48 area, hang around, because it needs to be able to hurdle this next step, and it needs a lot of power, so it might have to back up a little bit to be able to build the momentum. But I've got leg C/E in the weekly chart, and the MACD is okay, and the stochastic is okay at 76. That's that sandwich I talk about. It took such a big hit when it pulled back before that it turns out that the monthly chart, the fast-moving average of the monthly chart, has really been the momentum for this. On the downside, between 40 and 38.50 is really major support in the weekly chart. I suspect it's going to have a bit of a pullback at some point fairly soon, but most importantly, 92% in the stochastic is very, very good. Points of reference would be, there's a trend line, and I would say on the upside, it's 44.60 to 45.10, somewhere around there. Then I think it's going to have a bit of a pullback for about a week or so. That'll maybe make a peak C in the weekly, and then it'll have another move. It's that move, that next move, that has to take it and really clear the hurdle of 45 and leave it in the dust, as if to say, you might be a magnet, but now you're a propellant. You might be a repellent, now you're a propellant. But I have a target of the high of 46.92, the high of April of 2006. That whole area is going to be tough to clear, at least in the short term, unless this is just incredible momentum and it doesn't even give you a chance to get back in if anybody got out. Hope that helps you. Thank you so much for calling, Ernie. Let's go to Dave in Boston. Hi, Dave. How are you? Do I have Dave? Do I have Dave? If you're listening on the internet, it'll be a little bit of a delay, and I'm just expecting Dave's going to say, I'm here.
Hi, Basil. How you doing?
There he is. Hi, how are you?
Hey, this is Dave from Boston. Hey, I talked to you last week on Nugget.
Yes.
And I entered yesterday at $5.14.
Wow.
Yeah, which was a nice, I woke up this morning and I was pleasantly surprised. But I was thinking, do you think we can go to that gap fill on 6/19, June 19th?
Yeah. Okay, a couple of things we're going to talk about. I want to tell folks what we're looking at. We're looking at the direction daily gold miners 3 times bullish. Give me a second. I have to take a sip of tea here.
Yeah.
Okay, lubricated the throat. Got to keep it all. Excuse me. Sure. Got to keep everything working. Playing clarinet tonight. A little chamber music. Haven't done that for a little while. It's going to be a lot of fun. So, got to get the fingers and the throat all active here. Okay. What I'm looking at is NUGT is trading at 5.74. It's up 80 cents. But that is 16.19%, folks, because it is a triple. Now, what's really important about this, it has not accomplished what, say, the GLD has done. The GLD has spiked to a higher high. This is lagging a little bit. If you just had to blatantly ask me, where do I think it's going? I need to get a pause button right here, but I don't have it, so I have to lift the earphones off. Okay, now your question. Well, first of all, $6.43 was the high of the 1st of July. That doji candle is going to be really important. Let me just explain something. In the pattern, I'm going to go to the GLD. In the pattern I was looking at and discussed yesterday, what I'd said is, if this, right at that particular moment when I was asked about the gold yesterday, and I was looking at it, I think it was from Orlando. I'm just trying to think of who it was. Martin. Anyway, we had a call from Orlando. And I said, this is the moment that to start a position right now in the GLD would be important because it's a starter position, because I didn't see it going down all that much, but as a starter position you could have a little more flexibility for one reason only. If it started to decline, if today, let's say Bernanke never spoke yesterday and gold actually pulled back, the big point would have been that those big H, that lowercase h that go to M patterns would be failing for the third time, but after a very brief bounce, small bounce, and second bounce that didn't even go much above the previous arch, and then would say, oh, be careful, although it looks like everything is in place with the dollar in leg D about to make peak D, that if ever there was an opportunity, I said, yesterday afternoon to today, you have to see a big spike in gold, whatever it is. Well, the reason why I said that is that if it does that, then all of a sudden your weekly chart, forget the daily, starts to make a better V-shaped pattern. And if you want to come off lows decisively, you want two things to happen. You want an inside bar from a very ugly candle, as the monthly is doing, even though the MACD and stochastic look horrible, so I'm calling it a counter-trend rally. But it can be a real nice rally of points, percentages, especially as you've seen in your position. But most importantly, I want to see 128.01 hit in the GLD by a week from Friday. That's the latest. And if it does that, closes above it, you've got yourself a really nice pattern that says, now I'm able to sustain this move, and the gap that you're seeing, as you're seeing right now in the GLD, that gap should not be filled for quite a while, number one. Number two is you have got the spin-off. You have not got the root, which would be the GLD. Probably we should be looking at the gold contract itself, but we'll use the GLD because it trades at 1/10 the price, and NUG is trading at a smaller number at $5.73, but as a 300%. So I have to first of all congratulate you on your entry, number one. Number two, I have to congratulate you, you were staying with that entry. And number three, I have to say, it is not the root, it is behind for other reasons, because of that 300% mix that's within it. And the big test for you is the doji close, open and close of $6.19 and $6.18 on the 1st of July. That has to be pierced by Monday afternoon to Tuesday morning at the latest. It not only must it be pierced, but it must break away from 619 and start to trade in the 628 to 633 area. Leave this area alone completely, and then the gap, which is really what you're looking at, that gap with a high of $7 back on the 20th of June and the low the day before of $7.91, that whole gap can finally be reviewed and looked at, and you can turn around and say, we've made, and hopefully at that point you will get close to it and then make an island reversal and get back over into the gap with an island reversal and trade into the bar of the 19th of June, $9.09 is the high. Those are the stepping stones. On a short-term basis, when we're looking at the dollar, the technicals for me in the dollar are still acting quite well in the daily. The weekly is not good, and the monthly is decent. So I'm looking at this and I'm saying, is this really the start of the big move in gold to the upside that some of us have been looking for? And not a big move, I'm talking about a big percentage move within the bear market, which I think is still intact. And I would say to you, I think so. So here's the trade. You're in NUGT about 60 cents lower. I'm going to suggest that because you got into it and you had some kind of a stop, the two mental attitudes that are really important. One is, wow, I've got a fantastic gain. Do I want to give up that gain to be stubborn enough to say, well, if it comes back a little bit lower than my entry point, is it good enough to say, well, it's coming back, but I know it's going higher, so I want to hold it? Or do you want to say, wow, I can always get back in. I do not want to give up profits. That's the tough thing. So all I'm going to say to you, if NUGT closes under $5.40, consider that you want to have a little bit of, you want to do a lot of studying of the charts because that's where you might want to add. That's where you might want to get rid of it and say, I'm just going to take my profits. Or that's where you want to say, hey, I like what's going on, but I'm not prepared to take a loss under any circumstances. I will make a stop a little bit higher than I got in so that I'm guaranteed a profit. My bias right now is to say to you, congratulations, you're in at a great price. Half of your position at $5.43 should be considered iffy, because at this point, if it gives back that amount, because the weekly chart on NUGT is horrible, the monthly is, there are no words to describe it. It's like the Grand Canyon. You just keep going down. Yep. But I'm looking at the core, which is GLD, and that's improving a lot. So I think you got in great. I think it's going to be a fabulous trade. I'm just saying to you, I would be a little hesitant if the GLD by Tuesday, this coming Tuesday, is actually trading at 121 to 120. I say, wow. If after all this you can't get yourself going to get into the 125s, 126 area, that is horrible action. So I'm just giving you the thing. I think that you got a great trade, but I do want to look at the other side that says if such and such happens and the dollar suddenly finds buyers again and the dollar goes back to it's at 83.04 on the index. If the dollar goes back to 83.90 to 84.20, your GLD and your Nugget NUGT are going to be pulling back quite a bit. I don't think it's going to happen. I think the dollar needs a timeout. But I just wanted to give you that. And congratulations. That was a great entry point.
Thanks, Basil. You gave me a great roadmap to look forward to, and I'll keep an eye on that 619 area by Monday or Tuesday.
Great. Congratulations, and let's watch it. We'll watch it together.
Hey, good luck tonight with the clarinet. Thank you very much.
Thank you very much. That's Dave in Boston. Okay, let's do a couple of things here while I'm at it. I have lost CRY. I think it used to be. I don't even know what. If anybody out there you got TradeStation in the den, if you know the symbol for it used to be CRY. That was the. I can't even remember it because I just typed it in automatically so many times. That's the inflation index. What is it called? It is the commodity index. For what the commodity index is, I'd love to type it in. I needed to look at it. Now I can't find it right now. You see, the GDX is mentioned in the den. Mike mentions NUGT is 3 times the GDX. Yeah, you see, the GDX has been lagging. And one of the reasons is because there are so many smaller cap stocks. And this is the Market Vector Gold Miners ETF. And what's happened is that, yes, there's a beautiful arch formation in the monthly that has not tested the left side low of 1583. Instead, what it's done, it's stopped way above it. It's stopped at the GDX is right now. It's 22.21 was the low. It's trading at 24.42, up 10%. Most importantly, the stochastic and MACD are saying, I need a really powerful move to the upside to be able to stop the hemorrhaging in these stocks. And if it's going to move, I want to break that downtrend line, trading at 24.43. I need to clear 27.30. I need to break that downtrend line. So that finally I'm not even going to talk about the 200-period moving average at 36. That's 12. That's 50% away. I'm just talking about step by step. So that's what I'm looking at there. Now, yeah, it's the CRB, but CRB, they changed that. Let me just see if I can get it. No, I can't get it. I'll be right back. Basil Chapman, Tiger Technicians Hour, and I can't find my CRB index. Oh, I'll look for it over here. I'll be back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. In If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Folks, just in the limited time we've got, won't be able to take any more calls. I got an email. I got 2 things that I'd written down that I need to get. A couple of emails, actually. One was, let me find it here. I've got it here. Starbucks. Question on Starbucks. Made a round number high just recently. You know, I love round numbers. That round number high of 69 on the 9th of September. What I said was that if I just need to write this down. Okay, cool. If it's taken out, that's very positive. At the same time, the person was long Starbucks, and I said, if it goes over the round number 69, that 69 is going to come back and be a very important number. Well, it hit today, 69.36. What I said is, why not consider taking a little bit off taking a little bit off the level that you in the position to reward two things: money management and rewarding yourself for having such a good move when it's at all-time highs. And that portion, just a little bit you're going to take off, is what you want to put back at a certain level. If the monthly is still, which I've got as leg C, even if I do an instant restart, that's very important. Leg E in the weekly, technicals are still very good. So my question here my answer to the question was, stay in your position. It's a great position to be in, and it's one of the cool. Stocks making new highs continue to make new highs. Stocks making new lows continue to make new lows. In a bear market, they continue. In a bull market, the ones that are going to new highs, those are the favorites that money managers want to go for. They call positions. So you don't want to get out of it, but just reward yourself a little bit. That's number one. Number two is, had a quick question. No, not a quick question, but let's see. Hi, Basil. I'm a subscriber. I already have a position in Abbott Labs, ABT. What would be an entry point to add more shares? I appreciate if you can add a comment on the show at your convenience. Thanks, Len. Okay, Len, this is what I'm looking at. ABT. Now, this is what. Oh, I hope I've got the chart here. Oh, I can't believe it. Everything's gone. I'm going to say that out loud again so that TradeStation can hear me. It's not here. It wasn't an automatic save, and that's pathetic. A, B, C, D. I'm going to make the suggestion, Abbott Labs, ABT, having made peak D in the weekly, that the level that we're looking at right now, I don't think that this is a buy for an intermediate term on ABT, but I do think it's a short term to a little longer. My suggestion is that the 200-period moving average at 35.06, ABT is trading right now at 35.34. I would nibble right now. I would not, this got nothing to do with the other position. It is completely fresh. I'd nibble right now at 35.33, and I'd put a stop at 34.71. The moment it takes out 35.56, I would add a second position, and I would make the stop on the original position that you're adding right now, 35.31. I would say 35.31, that is a stop. Case closed. You get taken out. But on the new position, if it goes to 35.56 and then climbs to 35.63, that position, you make a stop maybe 12 cents lower than your entry point, but the moment you've got 27 cents of profit in that, your stop on the second position is at the point that you've gotten in, which is 35.57. The stop on the core position, this is your new trade, got nothing to do with your core position, this is a new trade. The stop on this initial position right now is going to be then at a profit. I don't care what the profit is, so that there's no way you're going to lose money. And the other one is the one that you're going to use as a trading position. What is the target? The target is to move about 35.82 and hold and try to get the gap of 36.09. It's only a percentage move. Do I think it's a move that's sustainable? I don't think the pharmaceuticals are quite in the area that we're going to be looking at for this next phase. So I'm just treating it as a trade. I would stay with the core position. This is only a trade. Thanks for being here. Stay tuned for Larry Pesavento. I'll be back actually tomorrow at 9 o'clock to do Steve's show, and I'll be back this afternoon to be interviewed with Tom at about 5:20. Thanks for being here.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.